Hey everyone, in today's video, we're diving into the Keltner Channel Strategy. I'll walk you through the entire process, starting with how the strategy works, then moving on to how we can optimize it using Freqtrade, an open-source trading bot. Finally, we'll run some backtests to see how it performs in action. If you're looking for a beginner-friendly, step-by-step Freqtrade tutorial, make sure to check out the link in the description below. But before we jump into the strategy itself, let's first break down the key indicators we'll be working with. 1. Keltner Channel. The Keltner Channel is a powerful indicator used to spot potential breakouts. It's made up of three main lines. The middle line, which is usually an exponential moving average, but in our case, we use a simple moving average. The upper band, calculated by adding a multiple of the average true range, ATR, to the SMA. The lower band, calculated by subtracting that same ATR multiple from the SMA. When the closing price moves above the upper band, it suggests a possible upward breakout, and we look for a long entry. When the closing price moves below the lower band, it suggests a possible downward breakout, and we look for a short entry. To improve accuracy, traders often combine the Keltner channel with other indicators, such as the Average Directional Index, ADX, to confirm the strength of a trend before entering a trade. 2. ADX. The Average Directional Index, or ADX, is a powerful technical indicator that helps us determine whether the market is trending or moving sideways. It's important to note that ADX does not indicate the direction of the trend. It only measures the strength of the trend. The ADX value ranges from 0 to 100. A value below 20 suggests a weak trend or a sideways market. A value above 20 indicates a strong trend, whether it's moving upward or downward. By checking the ADX before entering trades, we can confirm that the market is in a meaningful trend. This helps us avoid trading in sideways or choppy conditions, which often produce false signals and reduce the effectiveness of our strategy. 3. Choppiness Index. The Choppiness Index, or CHOP, is an indicator that helps us identify whether the market is trending or ranging. It's particularly useful for avoiding trades during periods of low momentum or sideways price movement. The CHOP value typically ranges from 0 to 100. A CHOP value above 40 indicates a choppy or sideways market, where trends are weak and trading signals are less reliable. A CHOP value below 40 suggests that the market is trending, either upward or downward, making it a better environment for trend-following strategies like the Keltner channel. By using the Choppiness Index in combination with the Keltner channel and ADX, we can filter out trades in indecisive or sideways markets. Now that we understand how each indicator works, let's walk through how we combine them to identify trade setups and generate signals. To enter a long position, we wait for all of the following conditions to be met. Price crosses above the Keltner channel upper band. This indicates a potential breakout to the upside, signaling the start of a new upward trend. A DX is above 20. This confirms that the market is in a strong trend, helping us avoid false breakouts in sideways or weak markets. Choppiness Index is below 40. This shows that the market is trending rather than moving sideways, which increases the reliability of our trade. Once all of these conditions are met, we enter the long trade on the next candle. After entering the trade, we place the stop loss just below the low of the signal candle. To give the trade some breathing room and avoid getting stopped out by normal market fluctuations, we subtract 2.5 times the average true range, ATR, from the closing price of the signal candle. For the take profit, we use a 2-to-1 reward-to-risk ratio. When the price reaches the take profit level, we exit the trade and lock in profits. Entering a short position works similarly to a long trade, but with the conditions flipped. Price crosses below the Keltner channel lower band. This indicates a potential downward breakout and the start of a new downtrend. A DX is above 20. Confirms that the market is in a strong trend, avoiding weak or sideways moves. Choppiness Index is below 40. Shows that the market is trending, not moving sideways, making the signal more reliable. Once these conditions are met, we enter the short trade on the next candle. Stop loss is set above the high of the signal candle, adjusted by 2.5 ATR to avoid normal fluctuations. Take profit uses a 2-to-1 reward to risk ratio. When the price reaches the take profit level, we exit the trade and lock in profits. Now that we understand the strategy, let's move on to optimization using Freqtrade. We'll test on the 1-hour time frame and split the data into in-sample, 8 months. For tuning the strategy, out-of-sample, 4 months. For testing on unseen data, the key parameters we'll focus on optimizing include Keltner period and ATR multiplier to adjust the channel's sensitivity, a DX threshold, the minimum ADX needed to confirm a strong trend and avoid weak markets. Chop threshold, the maximum choppiness index, helping us skip sideways conditions. A TR multiplier and risk ratio defines the stop-loss distance and reward-to-risk ratio, controlling trade risk and position sizing. We'll use Freqtrade's HyperOpt feature to find the best combination of these parameters. Once optimization is complete, we'll run a full backtest to evaluate how the strategy performs using the optimal settings. All right, let's take a closer look at the backtesting results. We tested the strategy on FIL perpetual futures using a 1-hour time frame over the past year with the optimized settings. Here's what we observed. The strategy achieved a total return of 126%. By comparison, the market itself saw a return of around -48% during the same period. The maximum drawdown was 14%, which shows that while the strategy did experience some retracements, it effectively managed risk and maintained overall profitability. Next, we'll review a visual summary of these results. The strategy was optimized with 8 months of in-sample data and then tested on 4 months of out-of-sample data, ensuring it performs reliably on unseen market conditions and isn't just curve-fitted to historical data. If you'd like access to the full strategy file, along with the complete step-by-step Freqtrade tutorial, it's available to supporters through the link in the description. There's also a pair-optimized version, which allows you to apply the strategy across multiple trading pairs, each with its own optimized parameters for improved performance. If you found this video useful, remember to subscribe, enable notifications, and share it with others who might benefit from it. Thanks for tuning in. See you in the next video.